Welcome to the Big Four Accounting Firms podcast, brought to you by bigfouraccountingfirms.com. If you enjoy our show, don't forget to help us out by subscribing to this podcast, sharing it with a friend, and providing us with a review on iTunes. Check out the show notes below for the link. Thanks, and enjoy the show.
We're back today with our Big Four Experience series, where we talk about
the advantages of working at the Big Four and whether the Big Four experience is actually worth it or not. So today we're going to cover the topic of career advancement.
And this is part 4 of our Big Four Experience series, where we explore if the Big Four experience is worth it or not.
So we'll first start off with the general structure of what the typical career progression in Big Four accounting firms typically are. You usually start off either as like an intern when you come in for an internship, but we're not going to go that far. We're going to say that you came out of college. The first level is the associate, which is plus or minus 3 years. After that, you get promoted to senior associate, which I would say again is plus or minus 3 years, wouldn't you say?
Mm-hmm.
Now, in order to get promoted to a manager, you would need either a CPA for most audit and tax, or an EA, which is the
Enrolled agent
if you're in the tax profession. Now, how about for advisory? Do they require CPA or an EA to be promoted to manager?
It depends on which advisory you're in. If you're like in management consulting, I don't believe you need it.
Okay.
But I think to get partner in accounting firm, you need CPA. Otherwise, you're going to be a principal.
Mm-hmm. So then after manager, how long would you say you would stay in the manager classification for?
3 years.
So
and that's
generally 3 years?
Yeah, and that's what we went through on our podcast last week, was how PwC changed their structure, their promotion structure, and in one of their slides, the average they put for each position, no matter what position it was 3 years.
And that's the general line among all the Big Four, is 3 years associate, 3 years senior, 3 years manager. And then after that, you could become a senior manager. Now, the different firms structure it or label them differently. Some call them director, like you get immediately promoted from manager to director. Other times it's manager to senior manager. And that senior manager may be equivalent to a director. And as we pointed out earlier, in PwC, where they're restructuring it, they have a manager, senior manager, and then director. Mm-hmm. So then there's a difference between the senior manager and the director.
Yeah.
But usually that's about 3 years as well. Now, when you come to the director phase of your career, it's not really 3 years, and then you move back up from there. It's a lot more competitive at the director level, because from director, you either go and become a partner if you have your CPA, a principal if you do not have your CPA, or you become a managing director, which is you're not going to become a partner in the Big Four, and you're just going to stay a specialized managing director for the firm. So at the director level, you actually see a lot of directors stay in that position well above 4, 5, 6 years. Some directors stay in that position for a very long time before they either leave the firm or they do get transitioned onto the partner track or as a managing director. So now we could go back and talk about the actual positions within that linear progression track. So as an associate,
each firm has different requirements for the different staff levels. And for associate, the main things that they're really looking for is for you to follow instructions, for you to be able to follow prior year's examples, but for you to maintain a certain amount of client hours. Because right now, the way the firms are structured and the way they make revenue is off client hours times a billable rate. So they want you to reach a certain amount of client hours, and the standard is about 2,000, 2,100, 2,200. And of those 2,000 hours per year, they want you to be working close to 100%. Which means about 1,900 to 2,000 hours. And you're not going to obtain this by working 40 hours a week. You have to be at the firm for longer than this, because you're not going to be working around the clock. So you'll have to make that up with overtime and working on the weekends. And it's really about putting in your time in this initial stage of your career.
And honestly, as an associate, you don't need to worry about your hours, because you will be working a lot. You will have a lot of clients, and it's expected that you work 12, 15 hours a day, especially during busy season. And it's okay to ask questions. You're new, you don't need to know everything. The things that you learn in school is nothing that you're actually doing in the workplace. So everything that you're doing is absolutely new to you and you're learning. And that's the phase of your career where you want to ask a lot of questions. The next phase.
Yeah, and also the other thing I would say about, well, because I have seen associates that don't have a lot of hours. So the thing I would want to say is, like, even though a lot of people think they don't want to work a lot of hours in the beginning of your career, you're typically younger towards the beginning of your career. So it is valuable to work those hours because you learn faster if you're touching the material every single day. If you're in a big company's financial statements, their org charts, their documents, you want to work those hours early on in your career because you get busier and busier as you progress through the Big Four, and you're not going to get that time to learn like you are at the beginning. And if you're working a flexible schedule at the beginning of your career, you're going to be behind your peers that are working those 100-hour weeks.
Mm-hmm. And this is the great advantage of working at Big Four compared to working in industry is the progression of your career is, I don't want to say it's set that you're guaranteed promotion every 3 years, but generally that is the track that we all go on.
Yep.
And do 3 years as an associate, you go and do 3 years as a senior. But 3 years in public accounting is worth so much more than 3 years in non-public accounting, non-Big Four. If you're working in industry, the amount of hours you put in is a lot more. The amount of exposure is a lot more. What you learn is a lot more. You're learning at a quicker rate, a faster pace. You're dealing with a lot more transactions and situations and information than you would be if you were in industry. So the career progression is a lot more favorable when you work at Big Four. Yes, it does require longer hours and harder work, but you move much, much faster in Big Four than you would anywhere else.
Yeah, and I agree with that. And if you wanted to really think outside of the box and you really didn't want to work at the Big Four, but you wanted to differentiate yourself, the one thing I would tell you to look for is to, if it's possible, if you want to go to industry or something, look towards a firm that does a lot of transactions and a lot of mergers and acquisitions, because as the market goes up, or just even as more capital comes into the markets, people want to do more deals, and people that have seen a lot of M&A activity are valued. So if you really don't want to go to the Big Four, then try to obtain a lot of mergers and acquisitions experience somewhere else. But that's really hard to obtain.
Another area that I think is really valuable is financial services. If you don't really, because a lot of people aren't able to get into M&A.
Yeah.
But I feel like learning how to manage financial instruments and how to account for them, that's a very big specialized area that everyone isn't really accustomed to. That's another specialty area that your knowledge could could take you quite far.
Yeah, that's true.
Yeah. Now, my understanding of the progression of Big Four and why it is every 3 years, not just the experience that you're getting from working in these levels, but it's also the turnover. Big Four does have a lot of turnover. A lot of people get burned out. That's the truth of the matter. A lot of people want to just do 2 years and get out, or just make it to manager and get out. Or once they get to that director level and then you no longer are on this 3-year movement pattern that has been established, then directors leave. Whatever the case, there is a lot of turnover in public accounting. So because of that turnover, it creates space in the higher levels, in manager level, in director level. So it allows people to continuously get promoted every year. There's a big group of people that constantly get promoted every single year.
Yeah, it's really amazing, because you'll be sitting there looking at the people above you and you're like, I don't know how I'm going to make it because these people are above me and it's so competitive. And then all of a sudden, all these people drop out.
Yeah.
And you just sit there kind of wondering, how is this work going to get done? Am I really going to take all this responsibility and do well? And amazingly, you do pick up additional responsibilities. You do end up challenging yourself, and you do end up moving forward.
It definitely comes in waves. You look at the group above you and you're like, oh my God, that's such a big group. They don't have any room for new managers. But then all of a sudden they all leave. It's like a big wave and they all leave around the same time. And then you're thinking, wait, where did all the managers go?
Yeah.
But that's good for seniors, because now seniors could have that opportunity to take on more challenging work, take on more responsibility, and then get promoted. So now, however, on the other side, the flip side, in industry, that's not the case. Usually when you're in industry, you have a pretty sweet 40-hour work week. You come in every day, you get yourself into a routine, you know what your work is like, and you see that management, they don't leave. In industry, you see people that have worked in that company for 15, 20 years. But then do they actually promote from within, or do they hire another director from outside of the company to fill that role? So the promotion track within industry isn't really guaranteed, or it's not really expected. You could be a senior or a staff accountant or a manager in industry in an accounting department in a company for 5, 6 years without ever getting a promotion. It's just not expected that you're looking for a promotion every 3 years, because that's just not how industry works.
Yeah, that's a great advantage of working at the Big Four, is the ability to really accelerate the progression of your career, to be able to move forward every 3 years, as opposed to waiting for the people above you to retire or get promoted themselves, which in industry could take 10 years, 20 years, and you could be waiting in one position for a really long time. So the Big Four experience is truly worth it when it comes to career progression, because everybody's in favor of this 10x stuff nowadays. As far as promotions go, the Big Four really does 10x the promotion process.
We appreciate your help in growing this podcast so we can continue to bring you the best Big Four content possible. You could help us out by providing a review on iTunes, sending us an email with your comments, and don't forget to share with your friends. There's a link below in the show notes. That's our show for today. Thanks for listening and have a great day.